Szanownych prezesów tutaj blisko sceny i panią prezes też prosimy o zajmowanie miejsc, bo czas już zająć się kolejnym punktem naszego programu. Proszę Państwa, ten początek był rzeczywiście taki filozoficzno-gospodarczy, ale mam nadzieję, że mają Państwo teraz taki bardzo dobry background do dalszych rozmów już bardziej inwestycyjnych wprost. Na przykład o tym, czy warszawska giełda, czy może jednak Stany, a może oczywiście jedno i drugie. W zdywersyfikowanym portfelu powinno być jakieś miejsce na jedno i drugie. Oczywiście pytanie o to, w jakim udziale. Teraz będzie mowa o tym właśnie pierwszym, czyli Stany. Pierwszym czy drugim, jak to było? Pierwszym przez te poprzednie 10 lat, czy kilkanaście nawet lat, bo tam działy się niesamowite rzeczy, jeżeli chodzi o wzrosty. Nieprzerwaną hossę od 2009 roku, no przerwaną ktoś powie, były korekty 2018, ale tam rzeczywiście Wall Street dało ognia przez te wszystkie poprzednie kilkanaście lat. Co by o tym nie mówić. Pytanie tylko, czy rzeczywiście dalej tak będzie dawało ognia. Jedni mówią, te Stany, że takie drogie, to tam jest tylko te 7 spółek, czy tam kilka spółek, a reszta spółek dopiero czeka na ten swój właściwy moment, żeby zaistnieć. Pytanie, czy te wielkie spółki nadal dadzą zarobić tak, jak dawały zarobić wcześniej. Słynna Nvidia, czyli gwiazda, to był ten rok? To się tak wszystko działo, że można już sobie pomyśleć, że to było ze 3 lata temu, prawda? A słynna Nvidia, ona tam spadła jakoś w ciągu roku, w lipcu chyba, czy jakoś w lecie spadła trochę, ale wycena PDE 113, w tych 112,5. To, szanowni Państwo, to jest po prostu jakaś szalona zupełnie. Co dalej? I o tym będzie ta dyskusja. Osoby, które podjęły taką decyzję i potrzebują, to mam nadzieję, że sobie maszynki do tłumaczenia wzięły ze sobą. Ponad państwami, czy akcje amerykańskich kolosów wciąż pozwolą zarabiać więcej? Zapraszam moderatora tej dyskusji, Kamil Cisowski, dyrektor zespołu analiz i doradztwa inwestycyjnego, Dom Inwestycyjny Xelion. Zapraszam, proszę o zajęcie miejsca. I zapraszam kolejnych panelistów. Robert Bochynik, wiceprezes zarządu Goldman Sachs TFI. Zapraszamy. Robert Herberg, prezes zarządu TFI Allianz Polska. Grant Bowers, senior vice president and portfolio manager Franklin Equity Group. Please a warm welcome for Grant Bowers. Gavin Marriott, investment director Global Equity Schroders. Panie Kamilu, oddaję panu scenę.
Okay, gentlemen, ours will be the panel where we'll talk about the most exciting investment themes right now and try to answer the question that was asked by Robert a minute ago. Is this bull market going to be different than the last one? I think that we have no doubt that the last decade was the decade of American technology, at least from an investment perspective. For several years now, we've heard that it became too expensive, that the next bull market just has to be different. But then in 2020, we've had COVID, and what was already a good environment for them became even better one. Yes, it's true that they lost a little value in 2022 last year, that bear market wasn't that good for them, but right now, a year into the new bull market, it very closely resembles the last one. Will it last? Gavin.
Thank you. I think we have to remind ourselves that the underperformance of those stocks in calendar year 2022 was quite exceptional. And even with the likes of Meta seeing a doubling of its share price year to date, has still underperformed the broader market on a 1- and 2-year basis. So I wouldn't get overly obsessed with valuation in the last 12 months or so. The second thing is you've seen very strong fundamental dynamics of those businesses, which has supported share price outperformance. So they have seen strong top-line growth, they have seen recovery in margins, and there are very few areas of the market that have seen such strong revisions. So our view is, despite that valuation, we can see these stocks continue to work as investment themes.
Thank you. Grant, you come to us from Silicon Valley. What's your opinion?
Yeah, so I guess, you know, our view from Silicon Valley is that these Magnificent Seven or mega cap technology stocks, they truly are magnificent companies. They generate record amounts of cash flow and profits, have fantastic competitive positions, and are playing in massive markets globally. And the valuations are very much deserved. I can think to the second part of your question, which is, will these businesses lead us into the next bull market? You know, history has told us that the companies that dominated the bull market before us don't often make the jump to the next bull market. You know, and we've started to look at many of these Magnificent Seven stocks as technology staples, and we often call them tech staples because they act and perform like staples. I think investors look at them as sort of places to park money while they wait better direction or opportunities in the market. And so while I think they will still be very relevant in the future and very much be the leaders from a market cap perspective, they are by themselves and their size creating a tremendous opportunity underneath the umbrella of these mega cap companies, which is where the next leaders of the future bull market, we believe, will come from.
Thank you. Robert?
Yeah, I like the term tech staples. I think this is a good term to describe these mega caps going forward. They will continue to generate good business and be very profitable and generally grow. But I don't think they can repeat that kind of growth that they've had in the past because, you know, they are already so large. They, you know, would be nearly impossible to become, you know, even larger, outgrowing or further outgrowing the way they have had grown in the past. Going forward, I think the technology sector, I would assume, will continue to be very attractive and interesting simply because this is a sector where you have lots of disruptions, and disruptions usually brings winners and losers, and if you have the right winners, then that's when you make additional investment performance, additional alpha. So I think technology will remain interesting. Here maybe a subset could be the whole theme about artificial intelligence. So I think this is something for the future. Not tech generally, but rather certain areas of tech, like, for example, artificial intelligence. But there could also be other sectors, for example, and this is now, let's say, wishful thinking, but for example, in the pharma sector, if they come up with a nice breakthrough and we find a cure for different types of cancers, for example, this could be also a huge driver for another bull run.
Thank you. Robert Bochenik?
Well, allow me to share with you a few reflections. Good afternoon, everybody. One is that on the, let's say, positive performance or positive relative performance vis-a-vis whatever the reference index or any other investment, can they continue, can these companies or any other good companies or well-performing companies of the present continue to do so? Yes, they can. What they need to do, they need to beat expectations, right? So that would be, let's say, the first one, because I would tend to present the story in which the valuation is not driving the performance, especially in the shorter time horizon. Yeah. So that's the first one. The second one is, do they have a potential to positively contribute to the performance of whatever index they are part of further down the road? Yes, taking into account what I said in my first, let's say, statement, adding to that the weight that they are having, right? So the contribution will be there. And if it is positive, then the contribution will be magnified by the weight of the companies in respective reference indices. Point number 3, when it comes to, let's say, repeating the speed of the growth, that's absolutely what you said, Robert. Can they do that? Perhaps they can. I would guess that when you just do the simple arithmetics, there would not be too much of a money with exchange rate 1-to-1 on yes and no, bet it for the yes answer, yeah, because they are just super huge. Now, one thing that is very important to kind of take into consideration is that from time to time we come across companies, and you mentioned that the Magnificent Seven, Microsoft perhaps would be one of the examples, less kind of exotic, that they managed to reinvent their business, like completely. So if you want to be super successful business-wise, and then the stock price would kind of mirror that business success, you have to be able again and again and again to reinvent your business case, be it by purpose or by chance or by luck or what have you. Yeah? So these are, let's say, thoughts on the question, can they? Yes, and Grant, on what you said, I certainly agree with the fact that if history is any guide, rarely you have the leaders of the last 10 years becoming the leaders of the next decade, right? So that's what we need to take into account. Yeah.
Thank you, Robert. Both you and Robert Erberg mentioned something that's often repeated, that those companies are probably becoming too large. Microsoft and Apple are each worth more than $2.5 trillion right now. And we often hear that if company gets too big, there comes a time when it's difficult for that company to grow more than the entire economy. Gavin, Grant, I'd like to hear your opinion about that.
Well, I think the point about the company reinventing itself and finding new areas of growth opportunity are vital in this, and in a way growing into their multiple. And Microsoft, as an example, you know, that is a stock that trades at 25 times earnings at the moment. On a 3 to 4 year view, the multiple will fall to somewhere in the region of 16 times based on our modeling. And that's because Microsoft is very well positioned to benefit from AI. It's benefiting in terms of its cloud platform. It's also benefiting in terms of the contribution of AI to its Office suite of products as well, which will probably add another 3% to its revenue growth. It will certainly add another 3% in the last results. So if a company like Microsoft can continue to adapt, develop, and benefit from some of these long-term structural trends, it can continue to grow and can continue to deliver the sort of returns that we've seen historically.
Thank you. Grant?
Yeah, I mean, I think you make a great point, and Microsoft in many ways is sort of the poster child for reinvention. You know, when Satya took over, it was a fairly, it was trading at almost single-digit price-to-earnings ratios. It was a slow-growth business. They reinvented the 365 platform for Microsoft Windows. They launched the Azure for cloud services. And I think what's going to come next from Microsoft from an AI perspective will truly be, I think, transformative, because they, of all these companies out there, have one of the cleanest paths to monetize AI. And it's because of their huge installed base. Maybe I'll take the opposite side for a moment and look at a company like Apple, which is everybody's darling. And you know, I think it's owned in every US equity fund on the planet, including ours. We like Apple. But when you think about how big can they be, this is a $2.5, $2.7 trillion company trading at a mid-20s type of earnings multiple. And Apple's not going to grow next year. Apple hasn't grown the last 2 quarters. What we're seeing is that the iPhone market is not necessarily saturated, but it is very discretionary. The ability for Apple to find a new pool of revenue that it can equal what the iPhone has brought to it is pretty remote. You know, that's why you keep hearing people talk about them launching a car, because the global auto industry is one of the few industries big enough to truly move the needle for Apple. You know, Apple falls very clearly in the tech staples world. People own it because it's Apple. They don't own it because they're a growth company. I think it'll be very interesting to see if Apple even stays in the growth benchmarks, because the fundamentals don't actually qualify them other than their brand, which qualifies them. So, you know, a company like Apple will continue to be strong. They'll continue to generate a lot of cash, but they're not a growth company like we've seen historically from a lot of these businesses.
Yes, Kevin?
If I can just make one other point about Apple, we don't actually own it in our US large cap portfolio for the reasons you described. But what I think size of companies and market cap weight of companies does force is investors to think not only about which stocks to own, but which stocks not to own. So with Apple, the simple decision not to have exposure to that stock in your portfolio can quite often introduce the biggest risk that you're taking relative to the benchmark index. And I think that is, you know, quite a distinct characteristic that we have seen emerge over the last 3, 4, 5 years because of the growth of these companies.
Thank you. Robert, what Gavin and what Grant said about Apple is symptomatic for the whole story of those mega caps. As we said, it's a company that basically doesn't grow, yet its valuation is probably twice what we are used to from companies that don't grow. Do you think that we are just waiting for a time when everyone realizes that and Apple's not worth $2.5 trillion then, but $1 trillion or less?
Yeah, that's a good question. So, to be very honest, if I look at these mega caps, I actually differentiate them. I think some of them have a bright future. Like, for example, I would agree with Microsoft. There you clearly have the growth case, the business case. They have huge barriers to entry. I mean, it's hard for competition, or even it's hard to realize or think of any competition for Microsoft, where it's completely different, for example, with some of these other names. I could imagine that Facebook will change, that people are not really using Facebook anymore. It's certainly, for me, not growth anymore. Apple could be, in a sense, outcompeted if Samsung and some of the Chinese providers become better and cheaper. That would be a scenario where Apple would also be no longer growing, or actually maybe even declining. So Tesla is for me a whole another black box. I have no idea how and why Tesla is valued as much as they are valued. So these mega caps I would differentiate. But even the good cases like Microsoft, yes, they will continue to grow, but it will not be the kind of growth anymore like they've had in the past, because again, then they would become a significant portion of the overall economy at some point by simple math. Yeah, so that would be my thought on the mega caps.
Thank you. Robert, you were the person that began that whole line of discussion, I think. It was you, because you talked a lot about the reinvention of Microsoft. Now I hear you don't talk about Apple. All of you don't talk about Apple so enthusiastically. Please tell me, if you had to choose one company from those magnificent 7 that has a bright future, and the other one that probably will be the first to leave the group, who would you choose?
Well, then before I would make any decision, that would be other than, you know, using the tool from the Microsoft, which is Excel spreadsheet, and printing the random number generator between 1 and 7 to give you the answer. I would rather kind of make the question more precise, like what are we talking about? Are we talking about the growth of underlying business? Are we talking about the growth of the stocks versus the growth of the underlying business? Are we talking about that company versus the underlying index? I mean, you can kind of frame it in various directions. And from my perspective, I'm not sure how important...
I think we are talking about those companies' role as the force that's moving the US stock market up. So I know that they are valued very differently. We all know that their growth is very different because on one hand we have Apple, on the other hand we have NVIDIA.
Yeah.
But right now, those companies, they are about 30–35% of US stock market capitalization. So my question is there a clear outlier there on one or on the other side?
You know, again, kind of, I do not have any kind of competitive advantage versus the whole market to say it would be number 1 or number 7. But let me kind of not escape that easily, because that would be kind of cheap. I would say that under a scenario, let's play with scenarios. Let's say that the scenario would be that we would have a super bright future, so there would be super soft landing rather than recession, and everything will be hunky-dory in global macro, which would, if this is the scenario playing out, then I would guess that investors are more feeling of going beyond the horizon. So the more you can promise me, the more eager I'm going, and in that scenarios, the ones that would kind of promote the biggest growth regardless of current valuation would be the preferred ones. Looking at the next 12 months multiples, I would tend to believe that NVIDIA could be one of them. Let's say that we play the opposite scenario, which would bring me to the answer to the difficult question that you gave me. We would see the recession. Now, kind of thinking about those 7 stocks through the lens of material recession, I would ask myself, so okay, which one of them is linked to the consumer per se by their business the most? And then I would say the smallest one of them with the biggest link to the consumer is the one who would drop the first. Yeah? And then we can have the conversation whether the first one would be Meta or any other, right? So that would be like super complex question to do simple yet very difficult question that you gave me. You know, that would be the way how I would.
I agree. It's a very difficult question, but maybe one of our panelists wants to dazzle us with his brave prediction that will be remembered for years from now.
Gosh, that's setting someone up for a fall. I can tell you which I wouldn't own, but the point I was going to make, which I think is more important, is I think it does depend on your time horizon and separating sort of short-term dynamics from long-term dynamics. For many of these companies, and it's not just confined to the Magnificent Seven, you can almost largely ignore current valuation in terms of making that decision. It's all about whether they are correctly aligned to long-term drivers of growth in the long term. And the real opportunity for all of us as investors is that the market is inherently inefficient. The market really is only focusing on the next 12 to 18 months forward in terms of trying to model revenues, earnings, cash flows. And actually, if you can extend your horizons, understand the long-term drivers of return of a business, you stand a much better chance of making that decision. And the stock I wouldn't own, just out of interest, is definitely Tesla.
Thank you.
Maybe I'll jump in and put some bold predictions, since that's what I get paid to do. First off, on Apple, I don't think the valuation goes down. Coca-Cola hasn't grown much in years, and it holds a 20+% multiple. And I think you can say Apple is equal kind of brand globally as a Coca-Cola or Campbell's Soup or these type of staples, right? So growth is not as important to Apple. I think they will continue to generate a ton of cash flow, buy their stock back, and be Apple for probably the rest of at least the next decade. If I had to put one on the side that I would be cautious on, I would agree Tesla. I think the valuation is tough. There's a lot of value. There's a lot embedded in what Tesla is trying to do, which is not just dominate the EV market, but actually embed a vehicle with you that then they can launch software platforms off of and create a recurring revenue model within the car market. There's a lot of that embedded in the price. It's going to happen. It's just going to take a long time. It's going to be bumpy. And in the meantime, I don't know, what is Tesla at now? 500 billion, 600 billion market cap. There's a lot embedded in there. You know, they are equal to the whole market cap of the auto industry. So downside risk, I would highlight. To take a contrarian view and say the one that I think people should not forget about, I would say Meta. You know, Meta is no longer just Facebook. They're competing with TikTok on the Reels side. They're monetizing that. I think you can say the concerns that everyone had around their investments in the metaverse, I think you probably could make a good case that was just a good cover story for investments in AI. And they've been putting tens of billions of dollars into their own large language models. They're going to run an open source model. So they have a huge potential to be the de facto, essentially large language model for much of the artificial intelligence backbone, which would be a big dynamic change from this open AI, Bard-centered sort of world that we live in right now. And then you could put a third driver in there, and that's this little thing they have called WhatsApp that they don't monetize. And I think if you thought that they could charge a penny for every message, that would drop a lot of money a lot of dollars to the bottom line. So there's a lot of upside potential in Meta, and the valuation at a mid-teens earnings growth rate or earnings rate, price to earnings rate is not demanding, and the expectations are low. It's an out-of-favor company that still has a lot of upside.
Thank you, Grant. Robert, Grant opened the door for us to go into artificial intelligence. It's the biggest investment theme there is right now. Everyone talks about it. What would be your advice for our guests, our viewers, our clients, how to earn money in the artificial intelligence theme?
Yeah. There's one very simple answer. I was trying not to make advertising for our own fund, but if you ask that kind of question, I have to make advertising. So we have a fund which is investing in artificial intelligence, and that would be obviously for clients the easiest way to participate. It's obviously a way to be very diversified, and it's the portfolio managing team which has the deep insights and expertise. Obviously, someone who's not from the industry, sitting far away from Silicon Valley, etc., has a much more difficult time in making good individual stock picking decisions. And so here is the huge advantage. There is a dedicated fund for artificial intelligence available. And in my opinion, that would be the easiest way to participate.
Okay, I guess I walked right into that one. So
yeah, sorry, I really didn't want to make advertising because it would be too cheap. But on the other hand, if you ask that kind of question, I had to.
Let me then ask Robert Bochenik a little differently about that. If we wanted to invest in the artificial intelligence theme right now, is the only or even the best way to do that to buy the stocks of those large US companies, or would you do it a bit differently?
I guess I would do it differently because I would introduce the thesis that AI is not the underlying thesis. Those 7 companies are in equal and for some of them even in material way kind of aligned. So that would be the statement number one. But allow me again to kind of switch the gear a little bit. Well, I would rather first start to look at whatever the new super hot topics comes my way on how not to lose the money, right? Because it's like a triangle of some type of action. In our case, it would be price action of certain company, sector, index, or what have you. Then you create the narrative, and then some action is taken. And in this triangle, also we as investors, and I would tend to believe that some of your clients are kind of processing whatever comes next. I don't know if we would have been sitting here, whatever, 1.5, 2 years ago, we would be talking about blockchain, and it was blockchain everywhere. You open the fridge, blockchains come out of that fridge. That just reminds me that perhaps a lot of interesting stuff is going on or in areas that are not really the buzzwords of today. Yeah. And it would be like super simple things like where the minerals would come for to be able to build the batteries for the devices that we would be using, through robotics to address the demographics issues that developed markets, predominantly developed markets, are facing these days, to our desire to live forever or live longer or live longer, better quality life. I mean, these type of themes are happening as we speak. So what I want to say is that rather than kind of thinking whether this or that company would allow me to benefit from the hype around the trend that has the AI label, I would kind of think about how to get and look under the hood, whatever the proposition would be, and kind of understand what are supposed to be the drivers. Once you understand that one, then you have perhaps something that is worth to take into the portfolio construction context. So that is kind of my thinking about AI or whatever type of big mega trend you would kind of impose upon me.
Okay, thank you. Yes, I think Grant wants to say something.
I'd be happy to jump in. You know, the way we've approached investing in AI has been to first look at it. One, I think we're kind of on this hype cycle, right? We're going through a point where we're either at or near maximum sort of hype around everything is AI and AI is going to change the world. I think there is a little bit of truth to that. I think AI will penetrate and change almost every industry around the globe to some extent. And as investors, we're sitting around trying to think of who is the winner and who are the losers. And we're sorting companies very arbitrarily into AI winners and AI losers, and often with very little information or data. So as investors, I think the way you approach it initially is you think about it from a picks and shovels, like who are the suppliers, who are going to enable this? Where is the money going to flow initially? And that's why you see companies like NVIDIA do what that stock has done, because they are really the only sort of shovel to build an AI model initially. As we think about where it, and Microsoft too, with their first mover, but as we think about where the next phase is, I think investors are very quickly going to become a little bit disillusioned in the short term, because the next question is, okay, where's the meat? Where's the revenue? Where are you going? Show me what you can do. And that's just going to take time. This is not a 1 or 2 year type of trend. This is probably a decade-long type of evolution. And I think a lot of the companies that we speak to, I mean, it's on everybody's mind. Every CEO is thinking about it, but they're trying to figure out is it a threat to their business or is it additive to their business? And I think some will be able to generate revenues from it very cleanly, and others will suddenly face headwinds because the market will evolve away from them. And we haven't sorted that out completely, but I think we're sort of in, like, to use it's probably not a good analogy, but a baseball analogy, we're in the first inning, right? We are literally in the first quarter of this game, and it's going to take a long time to play out, and there's going to be a lot of sorting of winners and losers. And one of the things we found is some of the best investment opportunities are when the market has decided that a company is going to be losing everything from a big trend, and you can have a differentiated view and realize that this is actually supportive and going to be additive to their business.
Thank you. I have been lately under the impression that everyone thinks they know who the loser is in that whole AI investment theme. Basically, it's Europe. Those very words were already said during the first discussion or probably by our special guest. Everyone says that the AI race is a race between the US and China. European equities are very out of favor right now. Lately, they've been trading on their, I don't know, 6-month lows, something about that. So please tell me, do you think that Europe has already lost the race? Or maybe right now it's a time to buy European equities because everyone thinks that? Gavin.
I think in your bridge into that question, you referenced AI winners and losers. And for us, it's about understanding the technology stack and the extent to which predictive AI can be used to transform business models. And in that respect, you have many, many European companies that can utilize AI to improve their competitive positioning, develop their product offerings, et cetera, et cetera. So European companies, whilst they might not be directly involved in the development of the technology, they can harness the technology to transform their business models, which I think is really important. And to your point, and Grant's point, the reality is no one really knows what that means today. And you have companies like, for example, Adobe, which in the space of a 3-month period was seen by the markets as a big loser in terms of the impact of AI, a few weeks later to be seen as a big winner as a function of its use of AI. So again, the market is really trying to understand what AI means for business models. And European companies, again, can benefit and utilize that technology. I might come back on the macro point later, but I'll just pass over to Grant.
Okay, thank you. Robert Erberg.
Yeah, indeed, it seems that it's China and the US for the time being. Either Europe will catch up, which is possible, or they will be lagging behind in the artificial intelligence space. But still, I would assume that with AI advancing, the European companies will also be using AI to have efficiency improvements and benefits from AI. But they will not necessarily be those driving companies who are driving AI forward.
Thank you. Does anyone want to say a few words about European equities right now?
I mean, I would agree. I think, many European companies will benefit from AI, but the likelihood, the biggest precursor to AI success or dominance is really compute power. And Europe is shockingly lacking. I mean, cloud computing was the last great technology shift we saw. And I'm always kind of amazed that Europe does not have a global cloud player. They seem to be absent. I think the regulatory environment has been a headwind for that. I think they have been slow to invest. I think there's fragmentation that has caused challenges there. But when you look at that, you see, Microsoft Azure, Amazon Web Services, Google Cloud. I think you could throw Alibaba and Tencent in there as global cloud players if somebody wants to put their data in China. But the reality is, Europe is a little bit absent when scale matters, I guess. It doesn't mean there's not innovation. There are not good dynamic companies here. But I think at scale, it's going to be a real challenge for them to catch up.
Thank you,
and I would
Robert.
kind of separate again. I would try to get ourselves out of the box of the questions that you are kind of imposing upon us, like, okay, AI versus performance of European equities. For me, as an investor, I do not need a new European super company to come out of somewhere for European equities to perform. when you look at like the top-notch drug companies, yeah, we can go to Switzerland, we can go to UK, we can go to France, whatever. I mean, who today is in a position to state that you cannot like massively increase the speed, the rate at which, or the probability at which you are able to bring breakthrough drugs to the world? And then we would have a completely different story. Now, obviously, that would be like, you know, my thinking about where eventually we can see the use case for AI, because this is somewhere where it is difficult. There is a hell lot of modeling, a hell lot of testing, long time to market, all types of risks, and so on and so forth. So that's one element. And then the second element is, you know, again, action, narrative, and observations. Again, coming back to the triangle, maybe something is already brewing. Who knows whether the next decade would not be, for some reason, the decade of financials or another sectors that are overrepresented in Europe and underrepresented elsewhere. And that would be like, without kind of thinking about which company is a winner or loser, on an aggregate basis, driving the story, the performance for European companies. So I think I would tend not to think about my investments or allocation towards European or any other equities through the prism of the latest big trend, like you said, Grant, that is in the making. We are not like having a reasonably good understanding of implications. That's just a huge thing that is happening. We are somewhere at the start. 2 years down the road, we would be talking about something else. Where many great things that today are just kind of in the mist would start to be materializing and would start to be hitting the real economy, not for the sake of the large language model answering your question in a kind of interesting way, or writing you the poem for the evening or whatever. So that's let's say, my kind of take on European equities, yes or no, where, how, and where eventually it would be good to understand if, at what time, to what extent, breakthroughs within AI could have a material impact.
Thank you. Gavin?
I agree entirely that, you know, we're in a world now where you look through these regional buckets and start to think about company dynamics. You look at where companies generate their revenues and their profits way before you start to think about where they're listed or where their country of domicile is. But to your other point about sentiment for Europe, I think you're right in that the sentiment is negative for Europe at the moment, and there is huge potential for Europe to surprise on the upside, because that simply isn't priced in currently and expected in estimates. And also, if you do buy into this Goldilocks scenario and this soft landing, then the characteristics of the European market are such that you want the cyclicality that Europe offers, rather than the defensiveness that the tech industry in the US offers.
Mm-hmm. Thank you. I hear what you said about not looking into the regions or where the companies are listed, but for the story about companies themselves. But I guess we just couldn't have that panel and talk about alternatives for the US market if we didn't mention China. Something is going on there. On one hand, it seems it's a very innovative economy. Right now, a few hours ago, our predecessors were talking about the electromobility. We all know that one of the problems with the European auto industry is that the Chinese competition is getting really strong. But please tell me, right now, do you think that we are on the brink of a crisis in China, and what started in the real estate market will have further consequences, and it's gonna a big investment theme in the following years, or something went wrong, but right now we are over that hill and everything's going to get better? Who could answer that question?
I can start. You know, I do not know that much of China, but I'll share with you what, let's say, our colleagues based in Hong Kong think. And I think the biggest change that we are witnessing, or we think we are witnessing, because these may be two different things, is the fact that it's security over growth in terms of prioritizations, while over many, many years we've seen growth as the #1 driver for the way Chinese leadership kind of formulated their road forward. So that's one thing. Two, we've seen the peak in terms of population. We've seen the peak in terms of movement from villages, from periphery to the cities. And if we subscribe to the notion that your GDP growth is defined by the growth in the population plus growth in productivity, then we've seen the best of China for quite some time. Yeah, so there would be, let's say, just to set the stage for the second one. Now, I'm reading from my colleagues that a lot of what we did not know, we know about the real estate sector of China and preferences. Now, is there a possibility for authorities to decide and stimulate more, because they are already doing it? They just have not decided to bail out the economy like they've done it back to 2008 and 2009 when they underwrote the global economy. Yeah. So over there, a lot of the progress has been made. Now, next thing that comes is the investability of China. I would subscribe to the view that if the market is as huge as Chinese, then certainly opportunities are there. Yeah, so that there is no doubt about it. One need to take into consideration when allocating or deciding to look into China and or any other emerging market is that you are facing different kind of framework which you as an investor need to take into consideration, right? And we've seen over the last 20 years emerging markets being the theme about which the panels like we have today have been made, and justifications of the premium on relative valuations of emerging market companies. Does that mean that emerging markets disappeared? No. Does that mean that investment opportunities on emerging markets disappeared? No. So that would be my long answer to a question whether China yes or no. Tend to believe that yes, with caution and understanding that the priorities for the leadership changed. Yeah. And stay away from where the most of the interference of the government is, because the government is pretty blunt about it, right?
Okay, thank you. We are running out of time. We'll have to go to the questions from the audience. Does anyone in the audience have a question before I go into those I see on the screen? Yes?
Now it works. Okay, Zbigniew Kubowski, nice to meet you, and I've got, let's say, a few questions to you. This year is different, as our colleagues already mentioned. So we've got Magnificent Seven, which drag the markets up. The rest of the remaining stocks within the Standard & Poor's 500, they more or less are on hold, let's call it, in a way. So do you believe that this leading group will simply escape from the peloton, or the peloton will catch up the group. This is one question. Whether they are simply able to deliver to the promises they put to the market, which are quite, let's say, spectacular. This is more or less this question.
Okay, and please, if you can say a few words about small companies in the US as well, because that's another question we have on the screen.
I think outside that top 10% of companies ranked by valuation in the US, the remaining 90%, as you say, have traded sideways. And there is definitely the potential for catch-up, and that would extend to smaller cap stocks in the US as well. You know, they're trading on multiples around 8-9 times in aggregate. So I think there's definitely catch-up potential. You just have to think about the exposures of those companies, and they are, you know, very definitely skewed towards domestic revenues, which might be a good thing in the near term, probably less good longer term.
Thank you.
I would agree. I think I would be, and we would be in the camp that the peloton will catch those leaders, that the market breadth will expand, and that those leaders, while still fantastic companies, probably will become sources of cash for investors as they find new ideas. If we see the IPO market open up again, I think you'll see those stocks be used as sources of cash to feed new ideas. You know, the relative valuation difference between the mega caps is so stark between not just small cap, which is trading at, you know, decade level type lows, but mid cap and even sort of the bulk of large cap as well. And so, you know, we've been cautious on the small cap space. I think it's very attractive, but you need to take a very long-term view, because the interest rate environment that we're in right now, and if you assume that we're in sort of a higher for longer type of rate environment, like that's a tough world for small caps to succeed when you don't have a lot of M&A and capital is expensive for growth. So, you know, they're probably too cheap, but I think it probably takes a while for them to actually start to work. We're finding that the mid-cap space is much more interesting and much more attractive. And, you know, granted, mid-cap in the United States is now defined as up to almost 30 or 40 billion. So it's quite a large mid-cap range.
Okay, we have time only for one last question. So I think it's going to be a question about that very difficult time many ESG funds have now, especially because of the clean energy sector. I think it's minus 35% year to date. If you could say a few words about that sector, about the future of clean energy and ESG. One of the Roberts, maybe?
Yeah, why not? I can pick that one up in a minute, and Robert, you can conclude with your thoughts if you don't mind. Well, I think that clean energy is one of the examples where you get the hype, you get a lot of very interesting companies in the private and public space, then you get wonky valuations, and then you get the reality check. And then it happens in the moment when we are perhaps experiencing a shift to a different macro environment with rates or with capital that is not going to cost zero. Yeah? And when these types of events kind of happen in one place, you get the revaluation. Does that mean that every single company that had massive decline of their price is not a very good business? I would tend to believe it's not the case. Did the mega trend of need for a different type of energy or a different type of energy mix, if you will, is it going away? No, it's not.
Thank you. Robert?
I would just add that energy is a particularly difficult sector because of all the different political influences. On the one hand, it's a global sector, but each country has their own energy politics. If you look at what Germany is doing, which is completely contradictory to what France is doing, we'll see what Poland will do. We know China, the US, and other global countries, they all have their own policies and regulations. And every time there is a change in policy and regulation, this obviously also has a big impact on the industry. So this one is a difficult one, but obviously this is a large topic for the future, yes.
Thank you. Gavin?
I'd just say, I think a massive buying opportunity. Again, take a 5 to 10 year view around that energy transition story, the structural drivers, you've got valuations which are really compelling. I would be a buyer of that theme today.
Thank you.
You know, our focus in alternative energy has been more around, as I said before, sort of the picks and shovels, right? The enablement of the electrification of the grid, the transition to a broader electric environment. To us, those are much more durable, stable, sustainable type of growth businesses that benefit from the secular tailwind. Alternative energy, as Robert said, you know, everything looks fantastic in a zero rate environment with government subsidies and, you know, a big, I would say, willingness to spend whatever it takes to achieve these goals.
But the problem is not going away, so the mega trend is staying there, right? And it is prime example of something that we would be discussing on the stage 2 years ago, when everything was hunky-dory, vis-a-vis where we are now, where really attractive investment opportunities, perhaps the companies about which we would be talking 5, 10 years from now are doing as we speak. Thank you.
I would agree. I think that there's opportunities there, but there's probably more pain to be had in the near term.
Thank you very much, gentlemen. Unfortunately, we have to end here. Let's have a round of applause for our speakers.